In this video, Tesla crushes it again with Q2 delivery and production numbers despite insane challenges, including the fascist shutdown of its Shanghai factory. Plus, Tesla confirms that in June, the company produced more vehicles than any other month in its history. So we'll look at the numbers, put them in context, talk about what this may mean for Tesla stock, and discuss what to expect in Tesla's Q2 earnings on the 20th of July. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment theme merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. So here we are, Tesla's Q2 production and deliveries. A stunning 90,000, wait, what? 90, my bad, that's 2020. I definitely didn't do that on purpose. So here we are, Tesla's vehicle production and deliveries plus the date for their financial results for the second quarter in 2022. In the second quarter, we produced over 258,000 vehicles and delivered over 254,000 vehicles, despite getting completely in Shanghai. I think I mispronounced that. Hang on. Despite ongoing supply chain challenges and factory shutdowns beyond our control. June 2022 was the highest vehicle production month in Tesla's history. So the actual numbers for Tesla production and deliveries here. Production 258,580 vehicles. Deliveries 254,695. By the way, I just want to take this moment. Tesla just needs to delete the Model S and X. The best product is no product, right? Now, seriously though, they're profitable, but honestly, as Elon has pointed out, they're more producing these now for sentimental value than anything else. Look how insignificant the numbers are here of Model S and X combined, give or take 16,000 versus about 250,000 for Model 3 and Y. If Tesla was to get rid of the S and X, a few people would cry, I get it, but honestly, they'd probably be better off. Not saying they should do it, but if they did, I would be fine with that. And also confirmation, Tesla will post financial results Q2, 20th of July, 2022. Now, I just want to put these numbers in context. Given the insane, futile, fascist, inhumane, just absolutely idiotic shutdowns in Shanghai, Tesla lost a little over 3 solid weeks of production. I think it was 21, 22, 23 days of total shutdown in Shanghai beyond their control, and then had to begin the process of ramping the factory back up. In total, Tesla lost close to 100,000 vehicles for the quarter. Yeah, that's right, close to 100,000. Obviously, this is something that stock investors whose brains aren't severely damaged will completely disregard, knowing that it's one-off, it was beyond Tesla's control, and it doesn't speak to underlying demand or production capabilities, just how much the Chinese Communist Party is willing to fuck Tesla and other companies in the face in a futile attempt at COVID zero, you fucking idiots. Now, for some important context. Remember we saw earlier, Q2 2020 production deliveries, 80, 90,000 give or take. The same amount of vehicles Tesla as a company globally produced and delivered 2 years ago in Q2 2020 is about the same number of production and deliveries Tesla lost in the entire quarter in Q2 2022. This is not insignificant. It goes to show how phenomenally Tesla has grown, because despite losing close to 100,000 vehicles produced and delivered, they still hit over 250,000, more than a doubling within 2 years, which would have been close to a triple in 2 years had the Shanghai shutdown not taken place. Now, just to hold myself completely accountable, for those who don't know, I'm just kidding, you all know, I plug it all the time, my Tesla valuation model, available exclusively on Patreon. All patrons, all levels, get access to my price targets, which are produced by my valuation model. Supporters at the investor level and above can download a read-only version showing most of the critical parts of my Tesla valuation model. And those with slightly deeper pockets, baller level supporters and above, can download my full Tesla valuation model, which includes delivery estimates for the full year. So, as we can see on screen now, the last update I made to this downloadable valuation model was on the 3rd of June, 2022. What were my Q2 delivery estimates at that time, the most recent available? 258,613 vehicles produced. I don't bother with deliveries because they're irrelevant. Tesla sells everything they produce. Now please, I implore all of my Patreon supporters at the baller level and above who have access to the downloadable, fully editable valuation model, fact check me. Confirm what I'm saying is true. I'd now like to show the difference between my estimate in the base case for Tesla production, as in the thing that I think is most likely to happen, and the reality. As we can see on screen now, my base case estimate for Tesla production in Q2, 258,613 vehicles versus the reality of 258,580 vehicles. Now, I'm not a math genius here, but I think that means that my estimate was off by about 0.01%. I mean, I was literally 33 vehicles off. 33. Of course, total fluke. It was just luck. It always is just luck. So I think what I'm trying to say is nothing. I don't need to say shit. I mean, the numbers are there. And as I said, many of my Patreon supporters at the ball level and above have this file sitting on their computer. It's been there for about a month with these estimates in there. The only further comment I'd like to add here is if you're not already signed up to Patreon, I mean, seriously, what the f are you doing with your life? Click the card in the corner or the link at the pinned comment to join now. All Patreon supporters at all levels get up-to-date access to my Tesla stock price targets over the next decade. In the bear case, the base case, we just saw my base case estimates for deliveries, the bull case and the hyperbull case, and these price targets are produced from my valuation model. The accuracy of which, in terms of the estimates producing those price targets, as we've just seen, is not bad. Alright, I'm done pointing out that I was right again. Until next time, which probably won't be very long. Did I say that out loud? Yeah, I did. It's super arrogant of me to say that, isn't it? Although, I am just being honest. So is that arrogant, honest, or both? It's definitely both. Let's move on. So what does this mean for Tesla's Q2 2022 earnings taking place on the 20th of July? As always, I'll be live streaming this in collaboration with Clean Technica. So, in short, Tesla got fucked to the tune of about 100,000 vehicles, give or take, in the quarter, meaning, obviously, everything's down. Revenue's down. Profit's down. Everything's down. In addition, 2 new massive factories starting to ramp up production, huge negative drag on margins. Oh, and then there's a Bitcoin impairment to the tune of almost $500 million. On paper, this is going to look like a horrendous quarter for Tesla. And the key word there, for Tesla. Any other company, they'd be slaying it. Still going to be huge profits, huge revenue, huge cash on hand, huge everything, massive expansion, crazy growth rate, epic plans, things on track. But on paper versus the prior quarter, probably ain't going to be pretty. I find it unlikely that this is going to have any negative impact on Tesla stock, but then again, I also find many things unlikely, including the fact that Tesla today is less than $700 per share as I record this in July 2022. So take everything I say with a massive grain of salt. But I think most investors will completely ignore this one-off, the big drag, the margins from the 2 factories ramping and the shutdowns in Shanghai. That being said, there is a credible risk that in the future there will be more insane factory shutdowns in Shanghai. To be honest, I'm stunned that there were any shutdowns this quarter. I mean, it's just nonsensical. COVID zero, yeah, good luck with that, you fuckwits. So keep that in mind. It is possible Tesla will continue to get fucked over the short, even medium term in China, but long term doesn't really matter. And as we see, Tesla's massively expanding the global footprint. Berlin ramping up. Just for the record, when Berlin is fully built out, not only stage 1, but 2, 3, and 4, I believe this factory will be producing in excess, and I mean well in excess of 2 million vehicles per year. That's more than Tesla as an entire global company will produce this year in full, just from Berlin. The same is true of Austin. I believe that will actually produce 2 to 3+ million vehicles per year over the longer term, absolutely dwarfing Tesla's current business. At this point in time, the Shanghai factory is at an annualized rate of a little over 1 million, give or take, massive expansion taking place there too. The point, as Tesla continues to expand its global footprint in terms of production capacity, one-off events, a slow ramp at this factory, a challenge here, a fire here, a shutdown here isn't going to make a meaningful difference as the company continues to just expand enormously. One of the big unknowns for Tesla's Q2 financial results is around profit margins and the type of vehicles being sold, e.g. higher trim, performance versions, higher profits or not. It seems evident from what Tesla have told us that they are prioritizing delivery of orders that are higher margin, e.g. if you include the full self-driving package, an extra 10 grand when you make a purchase, your wait time is reduced by many months in most regions. This is smart from Tesla. It appears Tesla is doing their best in tandem with massive price hikes, 20+%, some cases 30+% over the last 12-18 months on some products. And yes, these price hikes too are a major unknown for profitability this quarter. Tesla doesn't hike prices and immediately see that flow down to the bottom line because customers are waiting 3, 6, 9, 12 months. So we're starting to see a wave of price hikes roll through, but many of these won't have a meaningful impact until Q3, 4, or even Q1 or Q2 of next year. In addition to the price hikes, they're also incentivizing customers to get the higher trim versions, the more profitable versions, and or throw in the full self-driving package to take deliveries sooner, meaning Tesla is front-loading their deliveries, meaning more profitable deliveries in the short term, and this is very important. Tesla isn't doing this to over their customers, but to control costs and to control wait times. You don't want to be ordering a Tesla today and waiting 2+ years to take delivery. Of course, the caveat there, if the product's not already on the market, it's a bit different. Pre-ordering, reserving, that's one thing. But if you see a bunch of Model Ys driving around, you go, I want to get me one of those. And then you order online and you're waiting 2 years, years, it's just not reasonable. Tesla will do anything to avoid that happening, including hiking prices even further if they need to. In other words, Tesla's Q2 2022 earnings are likely to have an extremely high degree of uncertainty around profitability, gross automotive margins, average selling prices, you name it. There's a huge amount of uncertainty here. Oh, and by the way, will this be a bad time to mention the whole trick up Tesla's sleeve to the tune of hundreds of millions of dollars of profits? Yeah, you know what? I'm not even going to explain that. If you know, you know, and if you don't, well, you're going to have a very interesting surprise one of these quarters. So this has been an epic effort from Tesla. Massive round of applause and a big thank you to everyone working at Tesla. I know loads of you folks are watching. Great job on Q2 despite all the challenges. And for the Tesla stock investors out there watching, it's worth noting Tesla explicitly pointed out that June 2022 was their highest month of production ever. This is a clear indication that Tesla is now at and beyond their previous peak production levels. Meaning, Tesla Q3 production and deliveries are going to be enormously above Q2 and Q4 even further above that. In particular, we have Berlin and Austin starting to contribute meaningfully to volumes in the second half of this year. The last thing I want to point out, for some strange reason, my estimates, even in my base case for Tesla deliveries in 2022, are significantly above just about everyone, including the people that actually know what the fuck they're talking about. And no, that's not the Tesla stock analysts, I mean the folks on Tesla Twitter. I won't name names, but most of you know who I'm talking about. So either they're going to be wrong and deliveries will be way above where they're at, or I'm going to get absolutely roasted in the comments from you guys and girls in 6 or so months time when I'm massively over the mark. But I just want to point this out. At this point in time, there is a huge disconnect between where I think Tesla will be for deliveries in my base case and where most others are. Over the long term, of course, this is completely meaningless, but if things go relatively smoothly, I think there's a big chance that Tesla will massively surprise to the upside despite the challenges. Remember, my earlier predictions for Tesla production and deliveries for the full year in 2022 didn't include fascist shutdowns in Shanghai and Tesla missing out on about 100,000 units. But even after factoring in the shutdowns and things having to ramp back up, my estimates are still meaningfully above even the more bullish folks out there. Someone's going to be very wrong, and it could well be me. We'll just have to wait and see. Speaking of predictions and being right or wrong, one final prediction. I'd love you guys and girls to hold me accountable. Unless an asteroid destroys one of Tesla's factories, in fact, maybe two of them at the same time, this may be the very last quarter we ever see from Tesla, this decade at least, where they do not show quarter-over-quarter production and delivery growth. We've gone from one factory to two, and now from 2 to 4. All factories continuing to eke out additional capacity, some massively ramping and expanding, and in the case of Fremont, just figuring out new ways to become even more efficient. For some reason, Wall Street still isn't quite getting this. Most, even the more bullish analysts on Wall Street, aren't even expecting Tesla to get to 10 million vehicles delivered per year by the end of this decade. They're in for a rude awakening. I just want to emphasize the insane rate of Tesla's production capacity growth. Tesla acquired their first factory back in 2010. We're going to round the numbers here a little bit just to illustrate the point, okay? Factory number 1 in 2010. It wasn't until a decade later that they opened their second factory. An exponential rate of factory growth would mean they'd go from one factory over 10 years, then another factory for 5 years, then another factory for 2.5, then another for 1.25. Well, see, here's the problem. It went from one factory in 10 years, that's Fremont. The second factory appeared, Shanghai, which should have lasted for another 5 years based on an exponential rate of factory growth. Shanghai, initial production, late 2019. But now we're in 2022 and Tesla's already completed 2 additional factories. Not 1 in the span of 5 years, but 2 in the span of like 3 years. This is very important to understand. Tesla's compound annual rate of growth in terms of production capacity, they're aiming for 50+%. Fair enough. But when we look at Tesla's rate of factory expansion, I know it's not a perfect proxy for production growth, but play along at home here. They are way ahead of this target, and I mean way ahead. As I've said in the past, Shanghai ultimate capacity with the expansion, call it 2 million, Fremont 1 million, Berlin 2 million, Austin 3 million. Let's count. That's 8 million units of annual capacity from Tesla's existing facilities when fully built out and all additional production capacity is eked out. This means Tesla may need as few as 4 additional factories, each ultimately producing, call it 2.5 to 3 million vehicles per year, to hit their target of 20+ million vehicles produced in a single year by 2030. For some reason, people just are not getting this. There's still a huge amount of work to do between now and then, but Tesla's not only on track, they are well ahead of pace. Even some of the more bullish folks on Wall Street, for example, Moron Stanley, who currently have, I believe, a $1,200 base case price target for Tesla stock and a $1,600 bull case price target for Tesla stock, are expecting Tesla to produce a mere, call it 8.5 million give or take vehicles in 2030. not even half of their publicly stated goal. And that's basically the exact same number of vehicles Tesla will already have capacity to produce when they fully build out their existing, already constructed factories. Clearly, something's got to give. So I hope you guys and girls have enjoyed this video. Once again, huge congratulations to Tesla for smashing it out of the park despite the shutdowns and huge challenges with supply chain and so on. Oh, and lastly, please do not sign up to my Patreon page with the card in the corner or the link in the pinned comment, because if you do, you may find yourself having access to my extremely inaccurate estimates about Tesla, my extremely inaccurate Tesla price targets, which are based on the assumptions in my valuation model, which as we saw are all completely off the mark and therefore completely invalid, useless, and highly inaccurate. And I will see you in the next video. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.